Good morning. How we doing?
Good morning. Good morning.
Entrepreneurs, get your breakfast and move on down to a chair.
Yeah.
All right. Good morning, everybody. Glad to be here. Grateful to be here. We have a treat this morning. Sue is going to speak to us, and she just learned a PhD in accounting. So she is the top drawer of accounting. I know I have a ton of questions. I will try not to be monopolizing. But we're looking forward to hearing from her. Let me open us up in prayer. Lord God, thank you so much for breath. Thank you for life. Thank you for the ability to do all these amazing things. Teach us, grow us, bless Sue as she speaks to us. We pray in your holy name. Amen.
Amen.
Good morning. Hope everyone is well. Beautiful morning. Okay, my name is Suzanne Werden. I'm the president of Best Team Tax. We're a accounting and tax office. We do quite a bit of consulting as well, helping companies grow. That's sort of our little niche, is little companies that need to grow. And their biggest problems is that they know what they're doing with regard to their particular business, but they don't understand their financials, and which is understandable. That's not what they do. So normally people what do you call close? Okay. Normally people depend upon a bookkeeper, their accountant, whatever. And unfortunately, not everybody's created equal. You may get a bookkeeper that doesn't understand items, or maybe you might even get a CPA who doesn't understand. Okay, so what I try to tell people is that you need to be responsible for your own financial statements to a point. And if you don't understand them, which is understandable, you need to spend a few minutes learning some basic things. And I'm going to hit upon those because really you only have to know about 5 or 6 things to be able to ask the right question. You know, sort of like you go to your auto mechanic, you don't ask the right question, they don't fix your car. So, it is the same thing. If you're an accountant, you go to your accountant and you don't word it right, he doesn't know what you're talking about because he doesn't speak your language, if that makes sense. I'm a pretty seasoned accountant. You can tell I'm kind of old. My background started in the auto city, so hence why I'm not a CPA. I could become a CPA if I wanted to, but a PhD is actually better than a CPA. So we learned back in the corporate world to speak English. Okay, you go into a meeting and you start sprouting off stuff. Everybody will look at you. Can you just speak English? So you're going to find that if you ever come to my office, we speak English. So, so if you have, you might have to ask it twice, but I will eventually be able to answer what you're asking. So the first thing everybody knows about is the income statement, of course. So this is just a really knockdown financial statement. You'll notice we have all the operating expenses. Somehow that got not equal. I also have handouts if anybody wants them. So basically, what's a profit and loss? It's just your income less any expenses you have, right? Now, everyone in this room, when you run your house, you are an income statement. If you think about it this way, you get your W-2, that's your income. Maybe you get some interest from the bank, that's all your income, right? And then you have expenses. You pay your car, maybe pay your rent, your mortgage, whatever. Okay, so if you could think and not get so freaked out with your financial statements and recognize that you are a financial statement, personally. Yeah, it's unfortunate that people don't think that way because I think we have a lot less financial problems in the world if people thought about that for a minute with regard to their personal finances. So you'll note here we have salaries, rent, other operating. Now, other operating can include printing, office, anything it takes for you to run your business. One thing missing on here is cost of goods sold, which is a little bit different. Cost of goods sold is anything that directly relates to the selling of your product. So let's say you're an auto mechanic, okay, for instance. You're going to have the cost of goods sold. You're going to have to buy parts, you got to pay labor, so because it contributes to your income. Now, this is a service business, so service businesses won't have cost of goods sold. They don't have it because they don't have to buy anything to produce a sale. That's what cost of goods sold. Now, one thing I was thinking driving over here, a lot of times people will have a miscellaneous account, and I'm very anti-miscellaneous accounts. And the reason why I'm making years of being a corporate accountant, the last thing you want is a miscellaneous account, because what happens? You're in a hurry, you're lazy, you throw everything to miscellaneous. The end of the year comes and now your miscellaneous account is $200,000. Oh, crap. I go look through there. What is that? So try to avoid having a miscellaneous account. Actually, if you really want to analyze your business, you want to have more accounts than few accounts. All right. I mean, you don't have to have them for postage unless you have a lot of postage. And as we go on, you're going to see why I'm saying that, because I also am going to talk about doing comparisons. So profit and loss is pretty simple. The next one most people don't think about because they're not going to have retained earnings unless you're a corporation. You're not, okay? If you're a corporation, you should have something called retained earnings. And all that is you're beginning year forward earnings. So let's say you've been in business for 10 years and year to date, you made this 300,000, some years you lost money, some years you made money. And then you add your new income and then you take out dividends, hence where the corporation comes from. You could actually do this for a Schedule C too if you wanted to, but you don't need to. This is a corporate form. So I wanted to show in case some of your corporation, if you're wondering. One question I usually get from clients, and at first I didn't know how to answer it for a long time, because they didn't really go teach at school this, but what's retained earnings? Where is that? Where's that $515,000? I want to know where that 480. I don't have $480,000 in my bank account. So where is that? Well, what it is, it's your furniture, it's your inventories, it's your, it's basically everything you put into the company. That's what it is. So that usually shuts people up for a few minutes. Then sometimes people like to want me to analyze the retained earnings, which we can do that too. The next one is the balance sheet, which is really important. Even bankers don't know how to read, by the way, a balance sheet. A lot of bankers don't, okay? A lot of tax accountants don't know how to read it. It sort of just kind of comes up. If you have a corporation, you're gonna notice sometimes your tax accountant doesn't even fill out the balance sheet if you're under $250,000 revenues. It probably is good to fill it out every time, but it has in their cash. When you see the terms accounts receivable, inventory, and accounts payable, this particular company would be what we call an accrual company. That means that we are going to have outstanding money people owe us, and we're going to have money we owe people. Most small companies are only cash business. If you're starting out, just be a cash business for a while. You can always move over to accrual later. At some point, you'll have to be an accrual business, but by the way, by that point, I hope you can hire your own accountant in-house, because you're going to need to make journal entries to reflect all of those accounts receivables and payables outstanding. But you should be paying attention. In particular, a lot of people think they have to worry about accounts receivable, but you do. And I don't know, does everyone pretty much use QuickBooks here, or do you use anything sort of for your business? Because QuickBooks will give you, QuickBooks will give you all these reports if you have QuickBooks. Most people just get their balance, most people just get the profit and loss. They only care if they're making money, which I get. I'm saying, I want to make sure I'm making money. And they don't care about the rest. But that's where the problems come from, because sometimes you look and you say, oh, I'm making money, but are you? If that doesn't probably make sense exactly, but it's true. I worked for a very large company one time called Q-Line. It was a liquor company. They're not in business anymore, but they made Smirnoff. And my job was to go in there sort of as a forensic accountant and straighten out some problems they had there. And the plant manager and I got into a bit of a disagreement because I was looking at small accounts. And he's like, we're looking for the elephants. We're not looking for the mummies. In other words, we're only looking for big problems, not looking for little problems. So I just looked at him and I said, yeah, but mice scare elephants, right? So you got to watch the little accounts. You do. You got to watch the little accounts, because most likely the people I've caught they're stealing a little bit of money. They're not stealing a lot at one time. They're stealing a little bit at a time, okay? For instance, in that very same company, the maintenance manager, he could buy up to $2,500 of materials, whatever he wanted, without a purchase agreement. No one had to approve it. He could buy up to $2,500. This was in the 80s, so that's a few thousand. And the reason why is he needed that flexibility to keep the plant in good repair. Well, I'm going through the, because I'm a very curious accountant, so I'm going through the invoices, and I see one for aluminum siding. Wow, aluminum siding, okay. Where's aluminum siding? So in my high heels, because I used to wear high heels, I walk around the whole building, okay? Along the bricks, you know, next to the railroad track. It was like a 3-block building. It was huge.
It was at his house.
What?
It was
It was at his house, yeah. What happened is, I'm like, where is it? I don't see anyone. So I go to the receiving department and I say, hey, do you remember getting this aluminum siding? Oh, yeah. I'm like, okay, what happened? They said, well, Bill came around with this truck and he took it. And so I started going through all the under 25s of Bill had renovated your whole house. You know, I really like Bill, so, you know, it's hard for me to have to get fired, you know. I really like Bill. And, you know, and the thing is, a lot of people don't know this, but a big corporation, you know, they don't prosecute that. Did you know that? I'll tell you why we don't prosecute. It's embarrassing to the accounting staff that we didn't catch it sooner. Seriously. They don't, they let you resign. So we don't damage your career. Like, oh, okay. Whatever. But here's where I'm going to talk about some other stuff here, and that's why I brought these. I really want to concentrate on something called the cash flow statement. The reason why I want to do, because I'm going to make an assumption here that a lot of people understand. Money comes in, money goes out. That's your profit and loss. Your balance sheet is basically, you know, if you were to look at it from a personal point of view, your balance sheet is simply all your assets, your house, car, less what you owe on them. That would be your net worth, right? The difference. We would all like to have a positive net worth, but a couple of years ago, a lot of people had only negative net worths of the economy. Their houses went way down. They owed more money on their house than they should have. A lot of people got caught pretty much in a bad situation. Most people right now have a positive net worth. They're okay right now, waiting for the next decline. It'll happen again. People have short memories. So everybody be in trouble again. The cash flow statement is interesting, and this is what I'll bring out and do for someone. Actually, QuickBooks does have this report. Okay. The problem with this report is if you don't put in your financial statements properly, if you don't put your income, your expenses in the right place, this statement's not going to come out accurately. Okay. Because all this statement does here, will tell you where your money went during the year.
How would somebody know if they put the right amount in the right place?
Well, that's where you would go back to your income statement and you would review your income statement, all your expenses. Go through, on QuickBooks, you can go through any system you can do it. I'm just saying QuickBooks because most people, if you're small, you're using QuickBooks. The reason why you're using QuickBooks is because it's cheap. Yeah. Yeah, I don't know if anyone's ever looked at what a real system costs. If you go to a big company, those programs will cost you $5,000, $10,000, $15,000. It's cost prohibitive. It really is. I had a company, I won't name their name, but a huge dealership, and I've been telling them for 3 years, you can't use QuickBooks anymore. You can't use it. You're too big. Okay. Because in part, what their biggest problem was they couldn't balance their inventory. The reason why they can't is because QuickBooks will merge your invoices and come up with an average. You know, if you're buying inventory, some days it's $10, sometimes it's 11, sometimes it's 9, and you need the actual amount. And QuickBooks won't do that for you. So finally, they switched over, but they ended up having to pay about $15,000. The interesting thing was these people were incredibly wealthy, so it was like, I have a current programming. So, and so what you want to do is you would start with your income statement. What you should be doing, and you should even do this with your own I'm amazed when I meet people that have no idea where their money went all year. No. No idea. You should really kind of know where your money's going all the time. I had a client who finally hit his goal, he making $450,000 a year. And he came up with a great idea. What he does, and this is really a good idea. Any expenses he has, he puts them all through his American Express. He just puts them through one credit card. He has multiple credit cards, but he puts them all through one credit card. That way, when the statement comes at the end of the month, he can review all of his expenses on one statement. That's probably very smart. Okay, that's pretty smart. Because, you know, if you have multiple credit cards, it's hard to keep track of all the activity. It is. And many people have, especially if you're in business, you're going to have a couple of credit cards because you kind of need them for the flexibility. But you really want to try to control your expenses. And one way to do it is, that's why I encourage people, don't go and get a debt, don't get cash. Okay, cash will kill you. It will. You know, you get $100 out, you know, it goes, you don't, you know. If you're using your debit card or you're using a credit card, you're more likely to money's going. Cash can kill you. I know everybody likes cash. You're gonna go places and yes.
I just want to mention, if you use just one credit card, you will sometimes lose the others due to inactivity,
True.
right? So I have like 7, and what I do is I have one card for one business, another card for maybe household expenses, and you can do it that way instead of just one card.
That's true.
But if you don't use your credit card enough or often, they'll take it away from you.
Oh, that's a very good point. That's a good point. Very good point. So yeah, you do want to use your card. That he's right about that. But if you have like recurring expenses, like I'm always afraid to put, I'll tell you, certain expenses like T-Mobile, your gas and electric bill, you may not want to put them on automatic withdrawal. You know, all of a sudden you gotta look at it, holy criminy, my bill is $200. Every month it's $100 or $170. It's easier to fix it ahead of time than it is to pay the bill, if that makes sense. Because automatic payments have a way of getting out of control. I think you'll agree with that. I don't have anything on automatic. I don't. I watch them like a hawk. T-Mobile, I don't know how T-Mobile does it, but they'll every once in a while they say another $10, $15 for email accounts. I don't have an email account. It's paid. So if I wasn't paying attention, you know, I'd just be paying $15 extra, yes.
So are you saying that people like SDG&E are gonna take you to the plaintiffs if you're on auto pay?
They could accidentally, yeah, because you're not paying attention, you know, your bill goes up, you should know when your bills go up, why they're going up, okay? Now, maybe it's legitimate, you know, maybe you had guests, so you use a lot more electricity here, who knows? But sometimes it's just that it's an error, okay? You want to watch it, is what I guess.
Right, no, that's great.
Yes, you want to watch it. SDG&E probably isn't trying to keep you so much, but I know everybody experienced this a couple months ago. All of a sudden, SDG&E skyrocketed out of nowhere. It went up. My bill went up $100 in my office. Like what? You know. So I, of course, being the person not comparing, it just went up. You might want to learn how to read your bills sometimes. But SDG&E, your water is the more likely one that's going to create a, because you could have a leak. You want to pay attention to your water. You might have a leak out in your yard somewhere. So if it goes up a lot, you know, you might want to have them come out and see if there's a leak. SDG&E will do that too. They'll come out, make sure, right? So you want to make sure your expenses are in the right place. For instance, if you're in the 8th month, it's August, and you're paying rent on your company, you want to see 8 payments of rent, right, in the rent. Okay, you don't want to see 7 payments and the 8th payment went to supplies. You see what I mean? You want to see where your money's, if it's in the right place. People wonder what accountants do all day. You know, they do what you do all day. And that's what we do all day. We're always going to the house looking for mistakes. In big companies, that's what we do all day long. We're looking for errors. Because when the end of the month comes, I don't want that out of control. Because guess what? I'm gonna get a call from someone at corporate. That's not fun. ladies. I've gotten a couple calls from corporate. What's this? Yes,
Somebody on Zoom said they had the water leak, and it's true, you just said,
right.
it just went up. They want to verify for that, that was the statement from Zoom.
Oh, great, thanks. I know the funniest call I ever got one time, when I was at Huron, we had this older gentleman, you know, when you're 28, I was at Huron, I was 28 years old. Everybody looks really old here, you know. And this guy, I don't know how old he was, but he seemed pretty old to me, so, a real crabby guy. So I go in there, we were wondering when he was gonna retire, you know. So, me being stupid, not knowing what to do, I went in there, so when you're looking at retirement, you go, get the hell, excuse my language, but get out. Okay, whatever. So at the time I was in charge of budgeting, so we budgeted him to get a full salary with no, when he leave, he would have gotten quite a bit of severance pay. He's been with the company forever, he had a lot of vacation pay on it and stuff. So, I don't know, mid-year he walks in my office, I'm retiring tomorrow, I want all my money. Okay, now we have to give it to him. Well, you know, the financial statements were way out of whack because this guy had all this money. So I get a call from the corporate, VP from corporate in Hartford. What happened here? He's carrying on. I said, well, so-and-so decided to retire. He said, well, didn't you know that? I said, have you met him? Have you met him? You know what he's like. I said, if you had met him, you would know how difficult. He was very difficult to deal with. So that ended that conversation. Have you met him? Well, no. If you had met him, you would know why we didn't have that thing. I'm sorry, these are not quite in order. I don't know how they got messed up because on the spreadsheets are funny. So anyhow, we have cash received from customers. If you look here, these correlate back to your income statement and balance sheet. So if we were to go back for a minute, we see cash received from customers $750. If we were to go back here, we to the income statement, we see $750. Okay. Then we see receipt for interest, 15,000, it's on the cash flow. Right here, 15. And what's interesting here in that is you'll see these negatives, 235, 115, and 300. Those also relate back, okay, for what we spent. Okay, so those operating activities in a company are what it took you to run your company, whatever it takes, all right? Obviously, like I said, this is a knockdown statement. So if you have QuickBooks, I bet you never hit the button on the cash flow statement. Most people don't. They just look at the income statement, the balance. Maybe you look at the balance sheet on a good day, you know, but mostly we're all looking at the income statement, you know, all like, carrying on about that. So this actually starts with, you know, you have your, what you started with in cash, okay, and what you ended with. So if we started with cash at 412 and ended up with 192, clients will call me frequently and go, where did my money go all year? And it's like, okay, I can show you where it went. And I have a guy right now, he's having trouble with that. Where's my money going? I should have more money. Well, yeah, you should probably. You need to look at your income, you need to look at your expenses, see where the leaks are. So you might say to yourself, well, I can't tell. Look at your income statement and balance sheet, and you can't tell, you're just looking at 1 year. That is why I highly encourage people to do the next step here, which is to compare 1 year to the next, okay? And again, I apologize because it didn't come out right here. So if I compare 1 year to the next, that is a really good way to find a product. It really is. That's what we do in big corporations. If there's a variance of more than 7 to 10%, we're gonna look for it. What happened? Where did that go? Believe it or not, just looking at the financial statements, that's how I found someone had stolen a truckload, believe it or not, of black velvet. Nobody likes black velvet anyway. I'm like, what the heck? But you know who likes black velvet are bums, you know. So basically, you know, they were selling this black velvet and
On the street.
on the street, exactly, yeah.
How did you find it?
I found it through the inventories. I was looking through the through the cost of goods sold, and it didn't make sense. I was missing, it didn't make sense that my sales were a certain amount, but my cost of goods were higher in relationship percentage-wise. Okay, so you want to pay attention to that. Like, okay, so for instance, if my sales are like $500,000, and last month, my cost of goods sold were 300, but this next month comes up and my sales are 550, but my cost of goods sold are 400. You see what I'm saying? I call it relationship accounting. You want to compare the numbers. Your cost of goods sold should flow with your income. It should. It should flow. That's why when you're live, we do the accruals. But yes?
Well, so how'd you find it? So you started asking questions
Oh,
then?
well, yeah, I almost got in trouble. I think I could have gotten killed. They tried to fire me. They did try to get rid of me, but little did they know, I actually reported to a VP in Connecticut. But I was put in there for that reason, to find fraud. One time we just lost a bunch of liquor lit down the drain, so I just went downstairs to the factory and I asked the workers, what happened? Oh, yeah, the workers will tell you stuff. Oh, yeah, we had a big leak. We lost, I don't know how much vodka went down the drains. Okay, well, someone should have written a report on that. Okay, so that was explainable. But no, the liquor, it actually took me 6 months to figure the whole thing out, because liquor is a controlled substance. Okay, so you don't just have a truckload, a semi-truckload leave the plant, okay? It has to go through purchasing. Someone has to create a purchase order. Someone has to create all the documents, yeah.
Gotta load the truck.
Yeah, you've got like 20 different stop points, okay? So I knew I was getting onto it because they fired the whole security team and stuff. I knew I was getting, I was onto it. And what it ended up actually happened on there, I kind of pretty much had it down. I knew what had happened. And it was about 6 to 10 people in the plant were involved in this thing. And I was pregnant at the time. I was ready to give birth to my second child. I was like about as big as I was tall. I just wanted to go home again. So the operations manager called me into his office. He said, hey, I just want you to understand how I can afford to live the way I do. That's how how much everybody makes too in the plant. So he was giving me, oh, here's how I make my money. And I just sat back and I go, you know what? I don't really care that you stole all this liquor because I'm going home to have this baby. Go ahead and steal another load. I'll be back and catch you in. I don't care what you do. They've been stealing it for a while. That was not his first rodeo.
So did he get fired?
Did you know nothing happened to him? No.
What happened? So nothing.
Nothing. No, because again, I'm telling you right now, big accounting companies, they don't prosecute. It's embarrassing. They did move them out. Yeah, they moved them out of their position, but they traditionally, a big company will not fire you for embezzlement. Now that you would go to prison for though. That's a controlled substance. It's like stealing cigarettes. You go to prison for that. Any controlled substance, you'll go to prison for it normally. But big companies, the reason why they don't fire you because it's too embarrassing. It is. We're supposed to be keepers of the keys. We had a situation at ITT. It wasn't theft. We just had someone who didn't know how to do accounting, making one-sided journal entries. I thought they were going to have a heart attack when they figured it out. And I remember my boss, Chester K, he was in charge of the accounting. For God's sakes, whatever we do, we can't play corporate and all this happen. So we're at the division level. We were scrambling to fix it. So they wouldn't catch us. Yeah. Big corporations, I'm telling you, the whole time I ever was, I never saw them actually prosecute. Now, small companies will prosecute. If you read the paper of bookkeepers going to prison for 20 years for theft, it's a smaller company, usually. So he's a bookkeeper too. The long-time bookkeeper, everybody loves. Oh, little Sally, you've been here for 30 years. Yeah. I had someone call me one time. She had stolen, she had taken a check, her boss had signed it. It was like a recurring check. Every month they paid the supplier like $10,000. She took the check, put it back in her typewriter, and made it out to herself somehow. Okay. So I said, well, what you need to do is you need to replace that money. And because an auditor was coming in. And it was for like, it was over 2,500. Now, an auditor is going to look at anything over 2,500. They're going to look for that. And she says, well, I don't want to do that. And I said, well, then you're probably going to get, you may even get prosecuted. Well, he's my friend and he's not very smart. I said, yep. She actually said he was very smart. I said, but he's not very smart at all. I didn't catch it yet. Okay. I said, your only hope is to replace that money and the auditor probably won't catch it. Okay, probably won't. She said, listen, you don't understand. I'm not asking you how to fix it. I'm asking you to tell me how to get away with it.
Whoa!
And I said, you can't get away. You stole too much. You can only steal up to about 2,500 at a time. That's where embezzlers get caught. They steal too much at one time. They do. So that's why I tell you, take a look at the mics. Take a few minutes. Look at the mics for a few minutes. I've been at companies where, and to me, it's theft, but we don't do anything about it. People take out pens and paper. I caught the plant manager at Hugh trying to take out a bunch of wine one time. I told him, put that back. He got real mad at me. No, I don't have to on the plate manager. I said, yeah, you better put it back. I said, I don't care if you steal vodka, but you can't steal the wine. And the reason why is the wine we have to actually pay for. Okay, the vodka we manufacture. Okay, I mean the workers out of the plant, they're up at the top of a large skid drinking half the time. Yeah, we find liquor bottles all over the place. Yeah, we're constantly finding people drinking, so I don't care. You want to steal the vodka, I don't care. But you can't steal the wine because I'm going to miss that. You know what I mean? Because I had to pay an outside person for it. So we've seen this before. Like we've had a lot of smaller companies cannot have people stealing from them. You can't afford it. Okay, so anyhow, if you're moving along here, here is where you're going to find your problems. Okay, if I look here, okay, oh, look at that. My income services the customer went up by 9%. That's nice. My interest revenue went down though. I might want to look and see what did I do different. Okay, why did we go from 18 down to 15? There's a lot of reasons for it. You may have taken some money out for some reason. Okay, you don't have the money yet. Salaries went down by 7,000. That could be you're just doing a better job at managing your employee staff. Okay, usually where the problem is, rent will go up about 10% a year, but your operating expenses, as I said, here they went up by 13%. That's why you need your operating expenses to be more defined, so I can see where my expenses went up. Okay, if my postage went up, 50% or something, I might want to see, salary sending out gifts to her family using my USPS account. I don't know. You might want to take a look at that. Or someone ordering supplies on my dollar. One thing I do know from experience, I think everybody here is going to know as well, is that your employees think you're rich. They always do. They think you're rich, okay? Wow. They don't see you at night crying. They don't see all the sweat. They get their paycheck. You're the one sitting in the front seat of the roller coaster. And they don't see that. And so people steal from companies all the time. They don't think it's stealing. I mean, I'm just going to take this ream of paper home. I'm going to take all this pencils home and I'm going to do this. And it adds up. So you want to pay attention. And I don't think you have to get all crazy about the small stuff. I don't like to do that, but you do want to pay attention to where's your money going, especially if you have employees. You might even want to watch yourself. You might be doing it too. My favorite one is Starbucks. People spend so much money at Starbucks. Oh my gosh, Starbucks. And the average drink there is what? If you just get coffee, it's somewhat reasonable. But you get a special.
And the pumpkin bread.
Pardon?
And the pumpkin bread.
Oh, yeah.
That will run it right up.
Yeah, well, exactly. So did some people have some more questions or?
So getting away a little bit from the corporate structure for the sole proprietorship, your advice in terms of how to minimize your tax liability.
There's a lot of strategies out there. If you're a small business, depending on this, revenues, I would recommend to people to have a SEP, a self-employed, not an IRA, a SEP. It's different. Because you can take a percent, you can take a percent of your income instead of the straightforward 6,000. That's one. Another thing you can do is you can hire your kids. I hired my kids. They weren't actually working, but I was giving them so much money, I put them on payroll. Works out. Put your kids on payroll. You know, you'll pay payroll taxes, but you're losing all that money anyway. You know, kids are expensive. Yeah.
Is there a age restriction for that, or?
There
Can you
can
hire an
be.
infant?
No, they do have to be old enough. Yeah, they have to be old enough.
50.
Yeah, around 15. If you're really smart, you'll get them in the office. And I had both my kids in the office at 10. So, yeah. They were making copies. We did a lot of stuff.
So going back to the kids working for you, so I have adult kids, but I am supporting some of them. And I did have one start doing some work for me. And that's, I like that model. So they are working also another job that they still.
Oh, yeah, they can work part-time for you.
Side gig, okay. But then I have to pay them
Yeah, you have to pay the
Regular
payroll tax.
and a payroll tax. Okay.
See, now there's where it gets kind of nasty because the payroll taxes add up. And small businesses, sometimes you don't want to be paying those payroll taxes. But actually, if you've got employees or you got people working for you, you please don't pay them cash, okay? Because you're really losing out. You know, if you're going to be a self-employed, if they're going to want to be self-employed, make sure they fill out the right form, which is I think a W-9, and have them sign a contract with you that they know they're self-employed and they know that they're responsible for the taxes. Because if you go to EDD, which by the way is hot on the trail, it's independent workers, you can win the case, because I've done it about 15 times, if they have a contract with you that they know they're a self-employed person.
So as a sole proprietor, how about if I use them as a consultant on 1099?
You could do that too.
Okay.
The trouble is when they get that 1099, they're gonna have to report that income as self-employed. They might not like that from you, but that might be right up there in the
Even if you pay them 40?
40,000.
No, 40.
Poorly.
If you pay them
Low wage.
Yeah, you can do that.
like under 10,000, do they have to report it?
Oh, yeah, anything over $600, you have to report it. Yeah.
So is there another question? Is there an advantage if they're a full-time student and then they're working as a, so they don't have any income? But just-
Well, if they're a student though, yeah, you're right, you gotta be careful with that, because if they make more than, what is it? It's a really low threshold, you can't take them as a dependent.
Oh, I can't take it as dependents anyway.
Yeah. Okay, then go for it.
So that would be a good tax strategy.
It would be, if one of them, yeah.
Can you hire salespeople on straight commission?
You can,
You say you get a cut if you sold something. If you didn't sell anything, you get nothing. Can you do that?
you can do that, but I highly recommend because of EDD, state of California, because how they love to go in and, you know, try to make everybody an employee, have them sign a contract that they know that they are selling, they only make money on commission, they only get paid when they sell, and they are responsible for their own taxes. The key to if someone's an employee is if you tell them when to work and when to come and go. That's the key. That's one of the biggest criteria. Yeah.
You know, on that issue is if you control the replacement point in time,
Right.
because you could have contracts won't hold up.
Not if you're telling them when to come and go. Yeah, you're right. It won't work.
So
You cannot tell them when to come and go. You can't.
I'm not sure out here, but on the East Coast, the big sign to give someone a 1099 is that they make their own schedule.
Correct.
They have their own tools, whether it be a pencil or a calculator, and they make their own schedule.
Right.
I'm sorry, schedule, tools, and insurance. They
Right.
have their own insurance.
Workers' comp. Yeah.
Right.
Make sure they got
You
that.
can't give them a schedule. They're supposed to have their own tools and their own insurance.
But the contract will actually save you in an EDD audit. It will. Yeah, and the EDD audits, I don't know if you've ever had them, they're nasty. The only thing worse than that is a food and administration one. I think they dig them up, they've been dead a while and they're meeting.
Any more questions?
I just want to mention that I brought some agave, if anyone wants to take some home. It's different flavor. Use it as a sweetener. If you want to try it, make different drinks. You can also tell me what you did with it. There's plenty, if anyone wants to take one home.
Great. Thank you so much. Tell us where your office is.
I'm located in Fletcher Hills, on Fletcher Parkway. I'm in a little mini mall because I found that's my best, way. I'm walking, you can walk in. I have a storefront. I'm like an H&R Block.
Do you have business cards?
Yes, I have a number of them.
They have, that's what I'm
How small of businesses do you
Everybody
work
can
with?
take one of these if you
Oh,
want.
we work with people just starting out even. Yeah, like hairdressers, yeah,
I mean, you're your own business, right?
correct.
Questions?
Thank you.
Stephen has a joke, but I don't think he's gonna share it with the entire class. so.
He's a joke.
All right, let's close. Lord, thanks so much for this time. Thank you that we can gather freely and discuss business. We pray that you would bless our businesses and show us new ways this week. And thank you for Sue and her input. We pray in your name. Amen.
Amen.